Welcome to today's webinar, Leveraging AI-Driven Automation to Improve Business Resiliency in the Finance Back Office, sponsored by Auditoria.AI. I'm Jess Bozzo, and I'll be your MC. Before we get started, I'll cover a few features of the console. On the left-hand side, you'll be able to view slides and polling questions during the webinar. You'll be able to download a PDF of today's slides by clicking on the link in the resource list icon area. And there you'll also see an ebook that Auditoria has made available to you today on their 2020 survey that we'll be discussing. Please feel free to take advantage of both PDFs. We invite you to ask questions at any time during today's webinar in the Q&A area of your console. We've set aside some time to address your questions following today's discussion. You'll also have the opportunity to earn a certificate for 1 CPE credit. To be eligible, you must respond to 3 polling questions, as well as remain on the line for the duration of today's webinar. Afterwards, if you are eligible to receive credit, you'll be able to click on an icon to download the certificate located in the certification section. Speaking of polling questions, before I turn things over to our first speaker today, what we'll do now is go ahead and launch our first poll. You'll see this one up on your screen here, and it'll help us set a baseline for the content we'll be discussing today. This poll says, what percentage of your back office is automated? You'll see the answer options here are 100% full automation, about 50%, about 25%, or less than 25%. Please take a few moments here to select your answer. Again, for those who are just joining us, you'll need to answer 3 polling questions. This is our first one of the day. Leave this question up for just a few more seconds to give everyone a chance to answer. Then once we close this question down, we'll share the results and have our first speaker make a few comments before diving into today's content. So please go ahead and make your final selection here. Friendly reminder, you can scroll down to the submit button, to log your answer. All right, let's go ahead and take a look at the results here. It looks like the most popular answer with 46%, just about 46%, is about 50% automation in the back office. What I'll do now is turn things over to our opening speaker, Rohit Gupta, who is the founder and CEO of Auditoria.AI. Rohit, any thoughts or comments about how our attendees have responded to this first poll?
Thank you, Jess. It's a pleasure to be here. It's actually very consistent with what we here at Auditoria are seeing in the industry today, with companies essentially saying that a vast majority of the back office is still, unfortunately, rather manual. And it is it's very consistent with what we hear when we speak with finance executives, practitioners. Different companies are at different stages of evolution in their maturity. And whilst we are in a pandemic, we're going to talk a little bit about the survey and some of the research that we've published into the market. But some of the findings are very consistent with the fact that most practitioners, most finance executives typically see that they're at about that 25%, maybe a little bit below that. There's a certain percentage that have essentially gotten closer to about that 50% threshold. So it's good to see this. Well, terrific. Why don't we go ahead then and maybe launch into the prepared comments section to set the stage. We are here to share a little bit about a survey of automation in ERP and the finance back office that we here at Auditoria ran right at the outset, in the early part of the year, as the world was frankly beginning to deal with the effects of COVID-19. And we'll certainly talk a little bit about with our panelists later in this hour around what were some of the best practices as their teams had to deal with the pandemic. How did they manage the business during this? But in essence, what Auditoria did, as I mentioned, was we conducted the survey in the spring. We spoke with several hundred corporate finance professionals. So this is ranged from executives, CFOs, vice presidents of finance and accounting, chief accounting officers. We spoke with auditors. We spoke with folks in accounting itself, practitioners. And we essentially got them down to responding to 12 questions, which we've made the results available in an ebook, and we're going to make that available to all of you that essentially are participating here, that have registered here for this webinar. It was pretty interesting to sort of see this, and it was very consistent with a comment that I'd heard from, I guess, a quote that was made by Satya Nadella, the CEO of Microsoft, where I think he made a statement that 20 years of digital transformation seemingly have been accelerated in a couple of months, right? And that's sort of a pointer to what companies seem to be doing, what teams seem to be doing as they look at their transformation initiatives. So let's talk about some of the key learning, some of the key takeaways, the key findings from this survey. Now, the first finding was that, and this is very consistent with the first poll that we ran here today, was that most companies automate just a small fraction of the back office processes. And what we found was that, in terms of the very high or the high automators, that was, approximately 16%, the top two tiers, as you see on the slide there, represented by on the pie chart there with the green and the purple wedge. Unfortunately, a large set of practitioners, companies that we spoke with, still essentially are dealing with manual work in the back office. When we dug a little bit deeper into this, we found that the manual work stemmed around manual tasks, checking of work done by BPO teams or by outsourced practitioners. There was a lot of for lack of a better word, interactive response status tracking work that was going on. So, for example, think of vendors chasing AP teams for payment status, or audit practitioners or internal audit teams getting ready to complete, or we're in the middle of an audit project and data gathering exercises were going on. Customer invoicing, billing, again, status requests, with AR teams. So this was a lot of, what we'd seen. And, it sort of talked about the fact that, it's, again, reminded me of a quote that I'd seen from the research from Gartner, where they stated that today only 19% of controllers and 17% of heads of tax use automation in their day-to-day functional operations. So again, the key takeaway here is most companies still automate a small fraction of the back office processes. Let's go to the next. Let's go to the next finding. As we dug in a little bit deeper, we tried to find out which were some of the areas that had the most manual work, like which functions within the corporate finance function involved the most manual work. And probably no surprise, AP and AR still stand out as the areas that have the most manual work. And this was a little surprising to us, given the fact that there have been, a lot of investments made in technology, as far as investments around AP automation, around AR automation, that is specifically still dealing with challenges in AP and AR. That was certainly a bit of a surprise. As you see in the chart, the other areas that had a fair amount of manual work were in the internal audit area, and again, no surprise, audit projects, or especially audit readiness efforts before the audit actually begins, does request or does require practitioners to gather a lot of information, a lot of evidentiary data, a lot of documentation preparation. And so no surprise, internal audit and audit preparation, audit readiness, is certainly an area that we've seen, a fair amount of manual work in. The next area after this was, and probably it was a bit of a tie between the procurement, vendor management area, and then tax and treasury. Again, probably not a surprise, particularly on treasury, when with all of the reconciliation activity going on, some of the, dealing with multiple geographies, multiple currencies, dealing with distributed ledgers. These are the kinds of things that, typically see in a complex ERP environment. But again, on the vendor management side, right, dealing with tax forms, dealing with, all of the classical issues that go through, whether it is on quality checks, things of that type, seem to be areas where there's a fair amount of manual work. Again, this is a quick snapshot. Again, probably not a surprise to a lot of you that AP and AR is still, relatively manual. The third finding, and this was again interesting because, obviously, ERP systems have been around for a while, and we asked the question as to, with the advances in ERP over the last several years, has that sufficed or has that been sufficient to meet their automation needs? And what we noticed was that only 1 in 7 respondents felt that, that the ERP investments that they'd made and the systems that were in place was sufficient for, what their companies essentially require. Only 14%, if you will, of practitioners found that the ERP systems covered all the bases. Now, again, to me, this is, in my mind, not an indictment on ERP systems at all. I mean, if anything, the ERP systems were designed to be the system of record for your financial data or your, financial transactions. They weren't designed to be essentially a system to automate tasks or automate analytics or deal with interactive responses on status checks and providing insights to the myriad of stakeholders that are out there that the finance teams typically engage with. And so I feel that this is not a surprise. I mean, ERP systems, I think, have done a really good job in moving to the cloud and improving their user experience and usability and such. But there's a bit of a disconnect in terms of, the desire or the ability for ERP systems natively to automate a lot of the repetitive tasks, a lot of the, the back and forth that takes place across the stakeholders. And again, one of the comments that sort of struck me here as we were doing our research, working with the practitioners, was a comment that was again made by Gartner, where they had looked at some of the technology investments taking place concurrently in the industry around us, and I think they made a quote which said by 2022, over 50% of companies will use AI and will use automation essentially to support their investments in ERP and to support their cloud financial management solutions. And so that, again, I think sort of goes to the point as to, ERP on its own does a great job, reconciles the data, is your system of truth for your financial data. But you essentially are, companies are looking to surround it with the kind of information, with the kind of tooling in AI, in automation to, to help and to support their specific needs. All right. Now, the next finding was again interesting, and we essentially try to, look at how much time do practitioners at companies like, finance, mid-level managers, senior staff spend each month, particularly around, the time they invest, the time they've got to spend around either, doing checking of work of the junior staff or checking of work done by outsourcers, helping shared services teams out as part of the overall business process. And here's, the data that, that we gathered, which is there was a, significant amount, I would say about a third of the, the practitioners we spoke essentially said that they lost about, 1/2 day worth of time, and about a third lost 1 full day worth of time. And that's a big number, because if you sort of do the weighted costs, and essentially you try and correlate this back to what are the sort of cost imperatives for teams like a 20-person team or a 50-person team or even larger. That essentially adds up very quickly, right? Over the course of a calendar year, that's potentially several hundreds of thousands of dollars. And that was certainly again a bit of a surprise. What we found, again, I think the research states that time is money, and depending on the size of the company, there's a huge opportunity for recovery of time. And that, again, that dimension around recovering hours, hundreds of thousands of hours otherwise lost due to manual work, checking the work of the junior practitioners, were top level imperatives, if you will, for the company itself. In fact, one of the CFOs that we're working with told us that their company wouldn't scale, their G&A costs wouldn't scale if they weren't leveraging incremental investments in automation and AI to handle some of the workload that they would otherwise have had to previously hire, let's say, contractors to do at peak times, or essentially have to outsource it. That was another interesting finding from this. The next finding, let's say finding 5, were what were some of the specific key challenges that teams, faced in AP and in AR. And this slide, hopefully everyone is able to see this here, outlines some of the specifics and what were the areas, what were some of these processes where, they were dealing with, challenges. So, on the AP side, right, dealing with invoice accruals, dealing with internal approvals, payment status, like vendors either checking for approvals, checking for payment status, wondering, hey, why was there a short pay, looking to essentially make sure that, things are aligned better. And these are clearly some of the challenges that teams shared with us. On the flip side, on the AR side of things, what we find is a lot of time spent in repetitive follow-ups. And it starts with having accurate customer information, or having the right information, the right data for the clients, for the payment teams, for the payables teams at clients. And of course, lack of responsiveness, probably no surprise. And so what we found from AR teams, from collections teams, is very often they had to get the salesperson involved, the account manager or the account representative involved. They had to get, in some cases, customer success teams who are, let's say if it was a renewal, well, they had to get the CS, the customer success representative involved. These were, some of the challenges that AR teams faced. And again, this is sort of I think a reflection, if you will, of probably what many of you are seeing, in your companies. We'll certainly talk, with a panel here in a little bit about this, but again, I felt this was fascinating. And then one of the last findings we'll share, again, this is all part of the ebook that all of you will receive, for participating in this webinar, is the notion of recommendation analytics. Now, just very briefly, what are recommendation analytics? It's basically, intelligence that advises you ahead of the curve in a predictive manner as to where there might be issues, where there might be trouble. For example, predicting cash, predicting customer defaults, predicting, customers being, being late in making payments or in making remittances. So we found that, very few companies are using automated, analytics. I was looking at some of the questions coming in already, and this is one thing that I'd seen is that, analytics teams, FP&A teams, they're facing challenges here. There's a very few set of practitioners that are using, automation and forecasting, automation and algorithmic derivative forecasting. And we felt that, again, that was a trend line, that companies are looking to do better in, right? The COVID-19 environment, as we, are dealing with it here this spring, if anything, sort of accelerated customers, desire to essentially, a company's desire to figure out how they can get more predictive insights, how they can figure out a way to give incentives to make payments on time. These were some of the things that they were looking at. So I'm hopeful this initial set of findings, was useful to you. As mentioned again earlier, we're going to share this our ebook with all of the findings. This was just a partial set. Very briefly about Auditoria before we go to the panel. Auditoria.AI is an industry pioneer. We are, a company that offers a product called SmartFlow Skills, which is the industry's first cloud-native cognitive platform that automates a variety of tasks, analytics, and responses in the back office. We're delivered purely as SaaS, and we harness the modern technology that you can think of, whether it's machine learning, whether it's natural language processing, OCR to scan your invoices and tax forms, and deliver the derivative analytics, deliver the insights that you all look for. Our software interacts with customers, with suppliers, with auditors, with tax professionals, and other line of business stakeholders, just as a way a human would. And we're able to streamline your shared services functions and recover thousands of hours per year for your finance teams. On the right-hand side is just a brief snapshot of the ERP systems we work with. I saw that was another question I think that was asked as to what are the kinds of systems we work with, and hopefully you see that there. No surprises, the likes of the Oracles and the Workdays and the NetSuites and the Sage Intacts, Microsoft, so on and so forth, are just a handful of the systems, and this continues to grow every day. Now I will, turn the floor over back to Jess. We're going to get ready for the panel and invite our CFO executives, our guests today on the panel itself. But before that, I do believe we have another poll. So Jess, turn the floor to you.
Excellent. Thank you so much for a really great job teeing up the survey findings. As you mentioned, we've had some great attendee questions come in around them so far. So if you have any other questions for Rohit or any of today's speakers who you'll hear from momentarily, please do continue to submit those, and we'll try to leave some time towards the end of today's session to address those. As mentioned, this is our second poll of the day. Be interesting to see how our attendees line up with some of the survey data. So you'll see this question on your screen. What function in your back office is most manual? Is it accounts payable, accounts receivable, procurement and vendor automation, FP&A, internal audit, tax and treasury, or other? Just like our first poll, please go ahead and take a few moments to select your answer. Again, for those attendees who are interested in CPE credit for today, you'll need to answer 3 polling questions. This is our second one. Leave this question up for a few more seconds to give everyone a chance to answer. And once we close this question down, we'll share the results and have Rohit make a few comments before we start today's panel discussion. We'll be then handing the floor over to today's panel moderator, Nick Ezzo. Again, friendly reminder, please continue to submit your topical questions, and again, we'll get to as many as we can towards the end of today's session. So please go ahead and make your final selection here. Friendly reminder to scroll down until you see the submit button to log your answer. All right, let's go ahead and take a look at the results here. Just going to do some scrolling myself. It looks like the most popular answer, I think not surprisingly, with about 29% here, is accounts payable. Rohit, any thoughts before we dive into today's panel?
I think it's no surprise to see that AP and AR continue to be the areas where there's a tremendous amount of opportunity for optimizing and improving or streamlining the processes. It's interesting to see that FP&A as well, represents a large percentage of this work. And no surprise, we'll talk about that in through the course of the the panel discussion as well, as to where a typically large amount of time is spent in data gathering and data cleansing. But again, it's great to see this. It's very consistent with what we hear, what the survey results call out. I think it's a good segue to get to the panel. Why don't we turn the floor over to Nick? Nick, I'll turn the floor to you as you take it over from here and moderate the panel.
Sounds great. Thanks, Rohit. That was super interesting, and thanks for sharing that stuff with us. I'm learning stuff every single day as we go through this process. I'm super pleased to be joined by a tremendous panel today. Rohit is now moving over from being a presenter to being a panelist, so welcome, Rohit. We also have with us today Tian-An Nguyen, who's the Chief Financial Officer at User Testing. Tian-An joined User Testing after an extensive financial and strategic experience at OpenView Venture Partners. At User Testing, he leads the finance, business tech, and business analytics teams to provide the operations and resources critical to the company's mission. Welcome, Tien An.
Thank you, Nick, and it's a great pleasure to be here on the panel. Again, thank you, Nick. Thank you, Jess, for having me on it. And Rohit, thank you for sharing the really great insight for the survey, and looking forward to participating in the panel right now.
Cool, awesome. We're also joined today by Rob Goldenberg, the Chief Financial Officer at 6 Sense. As CFO, Rob leads all the accounting and finance functions at 6 Sense. Previously, Rob worked in investment banking during a career that has spanned over 15 years. At 6 Sense, Rob is passionate about tracking financial metrics to support data-driven management decision-making. Welcome to the panel today, Rob.
Thanks, Nick. Looking forward.
All right, so on to the show. So, as we went through this process and we listened to Rohit's synopsis of our ebook and the survey that we did, I thought it was interesting that we probably should get to really to the point of the elephant in the room. So we're all dealing right now in about the 4th month of a worldwide global pandemic, and maybe your business has changed, maybe it hasn't. I would find it hard to believe that your business hasn't changed. But I'd like to ask the panel a quick question, and we're going to start here with Rob Goldenberg at 6 Sense. Rob, how has your business changed in the age of COVID-19? Whether it's work from home, what's the biggest surprise or gap you didn't anticipate, and closing the books remotely? Talk about what it was like between COVID-19 and now.
Sure, and I mean, of course, we've all seen massive shifts in our business, and I would say that at the very outset, we were able to run a fairly standard playbook. I call it the recession playbook, but it's essentially, stop what you're doing, primarily in our case, hiring, and just go relook at what you think is going to be coming up in the next weeks and months and year. I think we've all sort of run that recession playbook multiple times in our careers, and then that was in many ways the easy part, just because we have pattern recognition there. But then it's the unique nature of COVID-19 started to slowly at first and then very quickly present new challenges where we didn't have a playbook to address them. And the two of the actual largest surprises were related to work from home. And we had a distributed workforce, but still about 80% of our employees were in actual physical offices. And frankly, I didn't fully anticipate how difficult and how stressful it would be on our finance and accounting organization to now have literally 100% of our employees working from home. And the first place where I thought we were prepared, and reality we weren't, was in dealing with expense submissions. We went from 30% of our employees submitting expenses in any given month to 80%. And while we thought we had automation in place, our automation did not prepare us for, the employee that bought a $2,000 desk chair because they have a bad back, or another employee who seemed to want to furnish their entire apartment now that they were working from home. And it wasn't just the finance and accounting organization that had to deal with it. Right, those expenses would go through a traditional flow. They'd get submitted to a manager. The manager is now all worried they potentially have another layer of approvals before, and now actually it would end up on my desk with things like a $350 gaming monitor. And in addition to that, we had 80% of the folks now submitting expenses regularly, but I was thinking about two things. One is, I mistakenly thought that with T&E essentially going to zero, there'd be less expense volume. That was wrong. But then the 20% of our employees who aren't submitting expenses now, we got to go track them down and see if they're going to be. So, for example, their home Wi-Fi. So we have a double-edged problem there. And then the other problem that came roaring to life about 7 or 8 weeks in is folks change their work location without telling us. So now we have payroll taxes that we have to go back and fix. And it's a huge question. I'll try to keep my answer short. But I will say that the one other thing was about closing the books remotely. It's gone reasonably well, but it has exposed some cracks in our process, and it's namely around collaboration. Sometimes it's just easier to be in the same room with someone.
Yeah, I totally agree with that. And some of those things, when you told me the other day about the furniture thing, I just chuckled because I'm surprised, but also not surprised. So thanks for that. Tianan, like, what did you learn in the last couple of months? And what surprised you most about how your business changed with COVID-19?
Firstly, I totally agree with Rob's point on both the big picture changes, the things that we have to put in place, stopping up hiring, examining some of the growth investment that we were planning at the beginning of the year, and of course now have to adjust, trying very hard to understand customer, the revenue trend, how our sales function is going to be affected by this. Now that we don't get to visit customer, we don't get to do big events. It's just a huge amount of shifting of resources and trying to understand our business in a more fundamental way, re-examining a lot of the assumptions that we had before, given how big the impact of the pandemic is. But what is interesting for me, what I would say a surprise for me, is the resilience of the employees and the positive attitude that many of them have, in the face of this massive issue. Because, working from home is very stressful for a lot of them, and we see that. We survey our employees, we talk to our employees, and we see that coming through. But what I have been really impressed and grateful for is that how our employees, especially for the one that I work directly with on our accounting and finance team, just really roll with it, just really work very hard and figure out resourceful way to handle the new challenges that come their way. So it's great. I spend a lot of time now trying to make sure that their lives is easier, that they have tools and systems to help support their work, and that's why I'm so interested in Auditoria, interested in the automation side, and that's why I'm on this panel too.
Awesome. It's really great to hear about the positive attitude. It's nice to hear some good news every now and then about how your team is actually they have resiliency built in already. So Rohit, as a founder and CEO of this company, you're leading this company through a pandemic. What are the things that surprised you about Auditoria and how we had to pivot in the last couple of months?
Yeah, I think very consistent with what both Rob and Tianan have shared. I mean, the reality is for us as a business, planning, forecasting, budgeting, the recession playbook, as Rob outlined. I mean, we essentially got into that mode right away to start assessing what we need to do in terms of our OpEx and how do we essentially plan across multiple scenarios. That was the good news. Is, I mean, these are things that you essentially always, for lack of a better word, prepare for, but don't ever assume that you're going to have to pull the trigger on this. And here we are essentially trying to scenario plan, in the middle of everything going on. I want to add maybe another comment, and that is sort of, we obviously talk to customers, CFOs. Nick, I know you do the same. This notion of essentially having clients, kind of like what Tianan outlined, which is, we've had multiple CFOs now tell us that their board has, right at the outset of the pandemic, this is sort of going into sort of that early March timeframe, had basically requested them to immediately do an assessment, if you will, of, frankly, their customer install base and assess cash and assess collections, and then be able to come up with estimates and essentially game plans based on various scenarios. And the amount of work that they required, they had to essentially, pull, cross-functional teams together, analyze different, data in different systems. This is one of those classic challenges, and especially distributed companies, that they find. It sort of, certainly, rings home well with what Tianan also had mentioned. Business as we know it is not the same. We're essentially helping our teams, in this distributed remote work function, and the finance teams are being asked to do more. So it's tough times, but we're great to it's great to see that teams are resilient and, collaborating with each other to get through this.
Awesome. Let's move to the next question if we can. We all started the year with our priorities intact. We spent a lot of time planning for technology investments in 2020. Of course, that all went out the window. Tianan, how have things switched up, with you guys now that the world's a different place? How are you thinking about technology investment?
Yeah, and is in a way related to the previous question that we just discussed, because everybody's working from home now, because everybody's really kind of working in a much more communication intensive mode now. I am looking a lot more into automation of system, but also integrating system together more tightly and enhancing the information flow between teams or within teams or between different teams in the company. I really felt that we have to do it, and Zoom is just a starting point of making sure that people can communicate well with each other. I want more of that to be automated. I want more tools to allow us to publish information internally within the company and gather more information more directly. And then, because we also have this now challenge of communicating with our customer and visiting our customers. So we are also looking very closely into investment in improving our ability to onboard, communicate, and stay in touch with our customer at a more at-scale model, where it's not about, for example, the the AR team sending emails to their contact at the customer to make sure that the invoice is received, things like that. We can't do it when we have hundreds or thousands of customers that are all working from home, that are all dealing with the pandemic themselves. We need to find a way to make the information, the communication more effective and more efficient. So those are the areas that I have asked my team to start looking into and potentially prioritize the investment in.
Good, awesome. So bring your systems more tightly together, automating more, enhancing the communication both internally and externally. We're hearing that a lot from CFOs we talk to. So let's switch over to Rob. So Rob, you started the year with a set of priorities. Now you've switched over to home decor and gaming monitors. What are the other technology investments you're going to make?
And agreed 1,000% on the communication piece. But the other thing that we're looking at as we reprioritize completely our technology roadmap is the time and bandwidth of our team members. And in COVID, their time their time to do things has gone down, especially our team members who are parents. And the demands on their time have increased. So we try to use the dual lens of, can we find a tool that will save our people's time, and can we find a tool that helps with better communication? And we're sort of picking off things one at a time. So I'll give you a nitpicky example. Everywhere we have a process flow where we download something from one system and put it into a spreadsheet or CSV file and upload it to another system, our current mandate is to find a tool that will make the connection for us. So every spreadsheet download, ideally, in the next 6 months, we will replace with some form of automation. It certainly saves time, but this is something that was not necessarily a priority for us before that has become a real pain point now. And then the broader example, and it goes to something that Rohit was saying, was we had to go through a much deeper analysis of our entire customer base at the request of our board than really we've done in my personal experience or in our company history. And it took us 3 or 4 weeks and involved, our entire customer success team, half of our sales team, a large portion of our management team, in some cases even our board members. And we want to find a way to be able to do that better. We won't necessarily go through that process once a month or once a quarter, but there's we're looking at ways to more holistically review the health of our customer base beyond just, do we expect to get paid and do we expect to get paid on time?
Yeah, yeah, and what you said, I've heard that over and over again. That finance people, we tend to throw more bodies at the problem. Downloading, uploading. I'll just spend more time doing it. I'll work nights, weekends, and holidays away from my family. It's a common thing, and I'm glad you guys are thinking about that now. So Rohit, you're talking to CFOs every single day. What are you hearing from the folks out there in the field?
Yeah, I mean, I'd say that the sort of top three, and these are sort of interchangeable, but the themes that we hear. Number one is sort of this acceleration in cloud adoption, or acceleration in, sort of the move away from on-premise / hybrid systems to more cloud first, SaaS first. There's that. The acceleration in automation, I think that's another dimension. Clearly, that's part and parcel of sort of, I guess, the core thesis of this discussion here today, Nick. I think the third piece is, I call it secure collaboration. And so that sort of, in a way, in my mind, summarizes a little bit of what we've heard from the other panelists. But it's this whole notion of, look, our folks are, employees are going to be remote. We might have contractors working for us. We've got to make sure that, their interactions, whether it is, their workstations, whether it's, the tools they use, how do we make sure that the data is secure and things of that nature. So I call it secure collaboration because it's more collaboration, support for, remote tools, but do it in a secure manner where data is not compromised. And so that is another element, another theme that we hear pretty extensively.
Good. Thank you for that. So as we went through Rohit's presentation and we talked about what are the most manual processes that people thought, clearly far and away AP and AR followed by audit. But I want to ask the panel here, does that match with your experience? What are the most manual processes in your finance department? And let's lead off with Rob.
It matches fairly closely. I would say that as much as we try to get away from manual and spreadsheet-based FP&A, and in many ways we just get sucked back in, right? The various requests from the various teams, the various sort of changes and pivots in the business model, and I would say that FP&A is right up there with AP and AR. Now, we maybe every 6 months we evaluate a tool to help automate it, but we have not been able to cross the chasm, so to speak, to get FP&A a little bit lower on that list and make it so that AP and AR really are the top two far and away.
Good. Yeah, it reminds me of that quote from The Godfather. You try to get out, and the minute that you think you're back out, they suck you back in. So there's your Godfather quote of the day. Tian-An, what are you seeing in your back office? What's the most manual processes?
Exactly the same perspective that Rob shared, and with the data, AP, AR, and FP&A. And I guess the FP&A folks just didn't complain as much because, in a way, they also love being in those Excel spreadsheets and have, very granular view of the model, right? And I think the challenge is a lot of our companies are growing, and when they grow, the business model become more complex. When you start to have subsidiaries, new product lines, new arrangement with partnership, all that just add more complexity into a model that that we could have worked really hard to automate and simplify. It just keep growing back again and again. And the same thing with AP and AR. Especially on the AR, I think things just get more and more complex with sales tax at the state level, with more and more different set of different type of payment portal that our team, that our companies have to work with in order to get payment. So it's both both the growth of the company as well as the complexity of the environment that we are working in now that caused these to be manual.
Yeah, I couldn't agree with you more. I was actually surprised on the one of the previous slides where they talked about FP&A, that with all the technology that's out there, you've got Adaptive Insights, it's part of Workday, you've got Planful, you've got Anaplan, you've got Oracle Hyperion. It's been around for many years. That still, after all these tools, FP&A is still very, very manual. Rohit, anything you want to add to this topic before we move on to the next question?
I think the only sort of comment that I'd add is. Some of it is sort of reflective in terms of, just the the bespoke and in some cases the custom nature, if you will, of the business processes that essentially necessitate perhaps some manual, interaction. But I think the other dimension also is the fact that, we're sort of in a world where, as IDC calls out, right, the advent of innovative technologies in AI and machine learning and advanced analytical forecasting is taking hold in business functions. I mean, we're seeing that, right now, whether it's in, tax or forecasting or budgeting, procurement, et cetera. And they've cleared a path within what has traditionally been a rather conservative area of basic accounting. And I thought the quote from IDC said it pretty well. And so we're excited to see what the next, few years can offer as some of the technology transformations accelerate automation in the back office.
Good, thanks for that. Just a quick time check. We've got about 10 more minutes before we do our last poll, and we've got just 3 more questions to get through, so let's see if we can get through these pretty rapid fire. So we're going to lead off on this one with Rohit, since you're right here on the call. And I know that in a previous life, you had a very large shared services project that was given to you at a very large multinational company that shall not be named here. But so I'll ask you, how are you thinking about shared services these days?
Yeah, Nick, I mean, that sort of, stems pretty well. One of my, most recent experiences really sort of centered around, it started off initially actually as a bit of an analytical work towards figuring out how do we go streamline, the operational requirements for a large multinational corporation, one of their divisions. And what that translated into is, hey, let's set up a shared services team, and we're going to go hire 400 people in a lower cost offshore geography that essentially is sort of the in my mind a bit of a band-aid approach towards towards addressing the real sort of the heart of the problem, and that is figuring out ways to essentially get more repeatable technology in place to address the challenges at hand. Now, here's the issue, though. A large proportion of the time, what we end up seeing is, the teams that we bring in, they're being used to this playbook of let's just set up a shared services function. Let's use the economic sort of cost savings we get by essentially setting up teams in this sort of hybrid mode. And that, whilst that might absolutely work and work to a certain extent, there might be the benefit, if you will, of complementing them with the right kind of tools and technologies to essentially improve their efficiency, so that there's minimizing the amount of, checking of the work, the repetitive sort of like back and forth that goes on, where senior people have to, provide oversight to the junior staff, and then, with, at least until recently, with some of these inflationary pressures, shared services, I don't want to necessarily say are quote unquote, the silver bullet answer from a cost perspective either. And so, there's ways by which, the profitability, the margin management of these shared services, I think, can be improved. In addition to taking out the drudgery and taking out the repetitive back and forth that happens. I still think shared services functions are a critical element, if you will, of what, companies, can leverage as they scale. But the composition of shared services, where there's a percentage of it which is people, a percentage of it which is technology, I think that sort of element, I think, is going to take shape and form over the course of the next couple of years as some of these transformation initiatives continue to accelerate.
Good. Tianan, in the area of COVID-19, have you changed how you're thinking about shared services?
For us, we are quite behind in this, I would say, compared to where I would like we should have been. We don't have as much shared services as we should, and we haven't really built out a strategy around that. It is something that I wanted to push, that I wanted to invest more resources in. However, there's a lot of, I would say, reluctance within the organization, and Rohit mentioned some of that. People don't trust certain things. People feel that there's a lot of overhead associated with shared services, and again, the technology side, people don't trust that there's enough technology infrastructure to help make that work really well across the world, for example. But right now, I think we have to keep moving towards that. We have proven now that everybody can work from home and everybody can work from anywhere in the world. So why not take advantage of that and rethink how we arrange our services, rethink how we coordinate our teams in a way that could be more centralized or more, shared services like. But I think we're still pretty early in that, and we want to have understand the right strategy for it, but also the right framework for it. Like what is being shared and what is being shared, how to set that up, who has the oversight, who maintain the quality of the output, and how much investment we need to put in that.
Cool, awesome. In the interest of time, let's jump to the next question right away. And for this one, I think we're gonna lead off with Tianan again. How are you thinking about finance in your back office? I mean, Rohit just talked about Satya Nadella of Microsoft saying things are accelerating. More than 2 years or 20 years of technology in 2 months. Tianan, at user testing, how are you guys thinking about automation?
We think of it as part of overall growing up for the company. We are growing very fast as a company, but not just in finance, but in other part of our organization, we are resorting to throwing bodies at the problem. And we really need to have a strategic shift in our thinking, in that throwing bodies doesn't work anymore. Throwing body can solve the need that we have today, this week, but it doesn't solve for the needs for the company long term. It actually creates more overhead operational costs, of coordination, of quality control, of onboarding and training people to do the work, to do the increased amount of work. So automation is a strategic pillar of success for the finance organization. Automation is also extremely important because it allows us to reduce errors, allow us to be more consistent, and set us up to basically be able to satisfy the more stringent regulatory and data privacy and data and security requirements that companies have to accept these days.
Rob, any thoughts on automation at 6 Sense? You guys are an automation platform, kind of, and how are you thinking about finance automation?
Yeah. So I try to always think of it in the context of, right, I mean, there's the throwing of the people, right, but right, we want to link people, our processes and our policies and the tools or the automation and sort of have it all grow together. And it seems like often we end up focusing more on the people and less on the automation when we should be focusing more on the automation. And the way actually I get my team to prioritize tools and automation is to remind them about when we implemented our sales tax automation. And I've been doing that a lot recently as we've been doing a bigger automation push. We implemented our sales tax automation software 4 or 5 years ago now. And at the time, it was very easy to do manually, but we implemented it anyway. And now we're at a point where we could not fathom processing sales tax without our automation tool. And the question I pose to my team is, well, what's the next tool that we just can't live without? And we're going to look back and say, thank God we did this.
Excellent. Thanks for that, Rob. So final question here. And by the way, Rohit, do you have anything to comment on this before we move forward?
I think let's go to the next question, because I think that'll sort of tie us in pretty well as we wrap the panel discussion. I think you were going to ask the panelists about forecasting.
Yeah. So, I mean, here we are, 2020, and we got a virus that's out of control or under control, then it's out of control, and things are opening up and they're not opening up. We've got protests in the street, and guess what? It's an election year also. So I would say that 2020 is the definition of an uncertain environment if we've ever seen one. And as many people on the panel said, we've lived through ups and downs before, but we ain't never seen this before. So I'm going to go to Rob first. Rob, tell me about the challenges you guys are dealing with forecasting during this time.
Yeah, I've found that our chief challenge is cash flow forecasting. For us, used to be easy, right? We knew our expenses, 70% payroll related. We knew 80 to 90% of our revenue with certainty, and our customers paid us reasonably on time. And when you have all those things, cash flow forecasting is fairly straightforward. And now all of those things have changed in still unpredictable ways. I mean, we now, our monthly close is actually extended now by over a week, right at the same time as we desperately want to close the books faster, because every month of data that we can get in this new normal will help us forecast better. So we have a sort of whatever the opposite is of a virtuous circle working against us. And it's actually one of the key things that we're scrambling to solve right now. And we haven't found a great solution yet.
Tian-An, how are you guys dealing with uncertainty and forecasting in the uncertain environment?
Rob, I feel like we should be talking every week to each other to commiserate. I also have lengthening close cycle. Every week, the cash flow is just getting harder and harder. And I'm spending a lot of time, I'm asking my team to spend a lot of time into the data to try to see, to have more trends that we generally didn't have to look into before, to understand each of the customer payment behavior, for example, and also try to understand better how our spending, try to optimize our cash flow, the cash outflow more. But it's just a huge challenge, and the challenge just make me realize how important having good, timely data is, and having data that are in the system, but all at the same time that are in systems that are connected together is how important that is. Like you say, because you cannot forecast, you cannot analyze even manually on an Excel spreadsheet if your data is not connected to each other and do not make sense.
Awesome, thanks for that. Before we hand it back over to Jess, Rohit, you get the last word.
I think on this particular one, this is, the idea around being able to forecast cash flow. We've got clients that essentially are public companies whose multiples are out there in the public markets as a function of free cash flow, and think about the challenges that they have. It's one of these where it's certainly something that where we're taxing finance teams more, and the opportunity to essentially help finance teams bring in that healthy blend of technology, automation, and people to essentially solve the business problem is really sort of where we think the world is headed. So again, I'd like to certainly thank my fellow panelists today, and I'd like to thank Nick again, you for moderating this. Why don't we turn the floor back to Jess? She's got another poll question. Jess, the floor is yours.
Excellent. No, I would like to echo everyone's thoughts. Really great job today. Nick, thanks for leading our discussion. And of course, a big thank you to Rob, Rohit, and Tian-An as well for sharing their thoughts. So before we close out today's webinar, we want to go ahead and launch our third and final poll of the day. This one says, the global pandemic has caused my company to accelerate the use of automation in finance. You'll see the answer options here: strongly agree, agree, disagree, strongly disagree, or I don't know. Just like our other two polls, please go ahead and take a few moments to select your answer here. Again, this is our third of 3 polling questions for today. And keeping an eye on the time here, I think what we'll do in the interest of time is go ahead and read out the most popular answer, but we won't have a discussion around these results. Friendly reminder to all of our attendees, we had a few ask. A PDF of today's slides is available under the resource list section of the interface, as well as the ebook that we mentioned throughout today's webinar as well. So please do take advantage of both of those resources. Let's go ahead and take a look here. We'll go ahead and display the results. It looks like the most popular answer with about 58% is agree. I think that pretty much echoes what most folks have said today, so really interesting to see. Of course, I want to say a big thank you again to all of today's panelists, Rob, Rohit, and Tian-An, for really sharing some really good examples with our group. We got a lot of good attendee feedback live on today's webinar. So thank you all for spending your afternoon with us. Of course, Nick, a big thank you to you again. A quick note to all of our attendees, although we didn't have time for Q&A today, please continue to submit your questions either now or in the post-event survey, and we'll be sure to follow up post-event if that does make sense. Big thank you again to everyone, including all of our attendees, for spending your time with us. We hope that you all enjoy the rest of your day and stay safe.